Hello there. Welcome back to Grade 11 Accounting. In this video, we want to look at bank reconciliation, whereby we are going to start by understanding exactly what is a bank reconciliation. So, a bank reconciliation basically it's a statement that is prepared making comparison of two documents that we have in the books of accounts. Remember, we have got the bank account that is in our ledger as a business, and also the bank statement that comes from the bank that we are banking with. So obviously, the details that should appear on the bank statement should be the same as the details that are appearing in the bank account in our ledger. Then, if there is a difference between those two balances, that is the balance in the bank account, the final balance in the bank account, and the final balance of the bank statement. If they differ, it means there is need to prepare a bank reconciliation in order to correct the errors that transpired during the period. Remember, there might be errors or omissions that took place during the period that we need to correct. So it can only be corrected through preparation of the bank reconciliation statement. So basically, we are saying there are two documents that need to be compared. The documents are in the form of bank account in our ledger, and then the bank statement that is coming from the bank. So you'd see that in the bank account is can be presented in the form of cash receipts journal and cash payment journal, whereby cash receipts journal will represent the debit side of the bank account in the ledger, and then cash payment journal will represent the credit side of the bank account. In what should appear on the debit side of the bank statements, like in this case, should be the same as what will be appearing on the credit side of the bank account. So it's that's the scenario that we have. And then what should be on the credit side of the bank statement should be on the debit side of the bank account. So basically, that's the scenario. So obviously, it's a matter of checking they appear again on the credit side of the bank account. So if we see some differences, we need to make some corrections. So obviously, that's what we have. And then in terms of favorable balances between the two documents, in a bank account, the favorable balance will be a debit balance. And then if you go to the bank statement, the favorable balance will be a credit balance. So let's just take note. And the opposite is true. Unfavorable balance in the bank account will be on the credit side. Then unfavorable balance on the bank statement will be on the debit side. So those are some of the key points that we have to take note. And also, we should take note of transactions that appear on the bank statement. But obviously, they won't be reflecting in our bank account. So we need to update them in the bank account as we prepare the bank reconciliation. Remember, we have got transactions like credit transfers. We have got some stop orders, debit orders. Those are typical transactions that will be on the bank statement, but not in the ledger, which means we have to update them in the ledger. Because this transaction, you can only get to know about these transactions when you get hold of the bank statement. So that's what we have in terms of the preliminary information that you just need to know before preparation. So according to this video, we are going to have a question, a typical examination question that we are going to look at that is within the context of this video. So we can just go to refer back to our question. This is our question of bank reconciliation. And remember, it is the bookkeeper of Dumes Driving Zoo is struggling to prepare the bank reconciliation statement for February 2022. Consider the provided information and complete the following. So give two reasons why it is important for Dumes Driving School to prepare a bank reconciliation. The question requires two reasons. So basically, the question needs you to point out the importance of preparing the bank reconciliation statement. So you see that we have got various importances that we can try to deduce from the preparation of the bank reconciliation statement. For example, detection of fraud. It can be used as a tool to detect fraud. If there was fraud which transpired during the period, it can be easily be detected by the bank reconciliation statement. So at the end of the day, you're going to see that it also acts as an internal control. So those are all some of the benefits of preparation of a bank reconciliation statement that we can deduce. So going to our answer section of 4.1, we are just going to state those points whereby we are saying important tool for internal control. Or you've got important tool for internal control. That's the first point, and then we look for the other one which you are saying are used to detect fraud. So those are some of the reasons. But we are going to see that we also have some reasons like it can be used to check the account, the bank account balance in the ledger against the bank statement a balance. So that's as one of the uses, and then also it can be used to identify outstanding EFTs or outstanding deposits. So basically, and also it can be used to correct some errors. It can be used as a quick process of identifying errors and omissions, and then also confirming accuracy of all transactions. So basically, those are some of the reasons that you can try to bring in. So this is what we have. We try to go to the next part of our question, which now reads: calculate the correct totals or balances for the following at the end of February 2022. So we have got the cash receipt total, which we have explained as indicating the debit side of the bank account in the ledger. So we are going to calculate the correct balance for cash receipt total, but obviously we need to go through the information that you are given in the question. We've got information A, which is an extract from the bank reconciliation statement of 31 January 2022, and 31 January is the previous month. So remember, the current month that we are is February 2022. So this is the bank reconciliation statement that was prepared at the end of the last period, which is the end last of the last month. So beneath that, we're given also information B, which is the balance of the bank statement of 20 February 2022 was. So this is the balance that we are going to start with in the bank reconciliation statement. Then C, we are given cash journals in the following totals of 20 February 2022 before the bank reconciliation statement was completed. So obviously, in the calculation of this part whereby you're going to calculate the cash receipts journal of balance, we are going to start with this balance that we are given on C, which is cash journal of 20,420. So you can just refer there and enter our 20,420. And from there, we can now be able to try to see other adjustments that are going to affect our cash receipts journal. So go to the additional information D that we're given. It reads the following items appeared on the bank statement for February 2022, but not in the cash journals. So this is clear. These are items that are on the bank statement, but they are not there in the cash journals. So they need to be updated in the cash journals. So cash journals explains the cash receipts journal and the cash payment journal. So in particular, at this stage, we are concerned about transactions that are affecting the cash receipts journal. So we go in the first one, EFT is numbered 415 and EFT numbered 415 and 420. So what does it mean? It means EFT number 415 and 420 are appearing on the bank statement. So we could refer back into where we have those EFTs. We've got 415 and 420. So obviously, we are saying these are appearing on the bank statement. So if they are appearing on the bank statement, it means they were outstanding at the end of the last period, but in this period they are now appearing, which is a correct reflection, and we're not going to make any adjustments for that. Remember, when we included them at the end of the last period, we are saying they are outstanding. So it's a matter of checking during the current period whether they are now appearing. So if they are now appearing on the bank statement, we are not going to make any adjustments in the journals, because when they were stated as outstanding at the end of last month, they were already reflecting in the journal. So at this stage, we are not going to make any adjustment. We can just leave it and then try to go to the next transaction that we are given, which is saying deposit of 8,800 is now appearing. So if you refer back, you see that we have that deposit is outstanding at the end of the last period. So it's now appearing, which means no need to make any adjustment for that. Then we go to a direct deposit of 3,500 made by a customer where you're driving school that are scheduled for March 2022. So this is a direct deposit. So this is another item that you can get to know about it when you get out of the bank statement. So we are saying it's on the bank statement, but not in the journal. So we need to update it in the journal with 3,500, and it's a direct deposit, which means we are receiving money. So it's supposed to increase the amount that we're having on the cash receipts journal. So we're going to say plus 3,500. Then we'll go to the next one, which is bank charges of 260. So bank charges of 260, remember, these are appearing on the debit side of the bank statement, because it's an outflow, so it represents the debit side of the bank statement, and in the journals it will be under cash payment journal, or on the credit side of the bank account in the ledger. So basically that's what we have. So we are going to include the other cash payments journal, but we can also try to pick the opening balance that we are going to start with the cash payment journal, which is 29,070. Then we just enter it on the section of cash payment journal, whereby we are saying 29,070. So from there, we can now be able to adjust these bank charges 260, and then they're going to increase the cash payments. So we're going to say plus 260. And then we go to the next part whereby we are now saying a debit card payment of 250 rands to purchase new windscreen wipers for the vehicle. So it's a payment. It's on the bank statement, but not in the journal. So you need to update it, 250. So it's also going to increase the figure for cash payment journal. So you're going to say plus 250 under cash payments journal. Then we go to the next one, which is now saying interest on the credit balance of 52. So the bank statement. So we are saying if it's interest, it means it's going to increase the balance on the credit side, of which the credit side of the bank statement reflects the favorable balance. So it's an addition that we have for the receipts. So we are going to add under cash receipts journal. So basically, we come here, we say plus 52 under cash receipts journal. And then we go to the next one, which is now the following items appeared in the cash journals for February 2022, but not on the bank statement. We see that these items that we have are in the journals, but they are not on the bank statement. So what does it mean? It means these transactions are supposed to be adjusted in the bank on the bank statement. So it's going to affect the bank reconciliation. So we can just reflect as the bank reconciliation. So it's going to affect the bank reconciliation. So we are going to adjust it in the bank reconciliation. So we leave that one. Then we go to the following errors were noted when preparing the February bank reconciliation statement. So we have we have got further errors that we also need to take note of. We've got EFT number 393 was incorrectly recorded in the cash payment journal as 10,500. In the cash payment journal is 9,500. So we refer back to EFT number 393. We see that we have got 393 there of the bank reconciliation statement of the previous period. We have 5,900. But it was entered as 9,500 on the cash payment journal. So a bigger figure was entered. So we are saying 9,500, then we subtract our 5,900. So we are going to see that the figure that we are going to get, we can just try to calculate there and see what figure do we get there. So you're going to see that you're going to get 3,600. So this 3,600, now the question is, where are we going to, how are we going to adjust it in the journals? Remember, we are saying we entered a bigger figure under cash payments because all these transactions that we are having here, they reflect the cash payments journal as the EFT. Outstanding EFTs represents cash payment journal, and outstanding deposits represents cash receipts journal. So that's the opposite. So that's what we have. So it means the payment journal have got a higher figure or a greater figure by 3,600. So we need to subtract it to remove it from the cash payment journal. So by removing it, we enter it under the cash receipt journal. So we are going to enter 3,600 under cash receipt journal. That's how we calculate. Remember, we said we've got our bank account like this. So at the credit side of the bank account represents the cash payment journal, and then the debit side represents the cash receipt journal. So if you have got a bigger figure of 3,600 on the credit side, like in this case, it means to correct it, you must enter it on the debit side, 3,600. That's how we cancel the credit side balance. So by entering on the debit side, we are entering it in the cash receipt journal. So basically, that's what we have. So we go to another section, we say under cash receipt journal plus 3,600. And then we go to the next one, which is now saying EFT number 423 was incorrectly recorded as 550. We refer back to 423. This one was entered at 550. Is stated there. We can just refer as 550. So what we are saying is we entered a smaller figure. And we entered a smaller figure by 5,500 minus 550. And we see that the figure that we're going to get is 4,950. So it's a smaller figure under cash payment journal, as we indicated here. So it means that we are supposed to enter again 4,950 under cash payment journal so that the figure goes with correct figure, which is 12,500. So it's going to go under cash payment journal. So we come here. So we say plus 4,950. So this is what we have. So now we have exhausted all the transactions that we needed to adjust. So it's a matter of now adding so that we get the totals. So here 20,420 plus 3,500 plus 52 plus 3,600, and you are going to get a total of 27,572. do the same thing on a cash payment journal where we are saying 9,070 plus 260 plus 250 plus 4,950, and we are going to get a total of 34,530. And that's enough on the calculations of cash receipts journal and cash payments journal. So we can try to see in terms of the next question that we have. So the next question is saying prepare bank reconciliation statement on 28 February 2022. Our question has got 6 months. So remember, the important thing at this stage is to find the opening balance that we are going to use in the bank reconciliation. But we are given it here. The balance that we are given for the bank statement will be the balance that we're going to start with in the bank reconciliation statement. So it means the balance on the bank statement on 20 February 2022 was 11,892. So that reflects the opening balance that you're going to use in the bank reconciliation statement. So we have 11,892. So for us to see if it's a favorable balance or unfavorable balance, we look at the sign that we are having on this figure. We see that it's a positive figure. So if it's a positive figure, it's supposed to be the opening balance on the credit side. So we go there and go to the credit side. So we are saying now this is our bank reconciliation, whereby we are saying we are just going to say balance as per bank statement. Balance as per bank statement. Balance 892. So basically, that's what we have. Then we go there and try to see the next transaction that we need to add. So you are supposed to go to the section of E, which is the following items appeared in the case journals for February 2022, but not on the bank statement. So at information E, that's where we're going to find out about items that should be in the bank statement, but are not indicated. They are appearing in the case journals, but not on the bank statement. So for rent page and EFT 5451 for petrol with 2,300 and 1,700 respectively. So we also have an outstanding deposit. We start with an outstanding deposit of 750 rands from a customer. So you say outstanding deposit. And we know that if it's a deposit, it's an inflow, which should be on the credit side of the bank statements and also should be on the debit side now of the bank account in the ledger. So debit side being under the cash receipts journal. So basically, we are saying the amount is 750. So we are saying 750 on the credit side. And from outstanding deposits, that's why we can try to look for outstanding checks or outstanding EFTs. So we have the information given here is EFT number 450, which is for amount 2,300. So we can start with that one. We are saying outstanding EFTs. EFTs, and obviously we are going to start with number 450, and the amount we are saying is 2,300. So we can just it should appear on the debit side. It means under the bank account in the ledger, it will be on the credit side, and credit side being the cash payments journal. So that's what we have. Then we refer back to the other check that we are having. We have now 451 of 1,700. So we come here. We can put again number 451. We'll say number 451 in the amount is 1,700. We can just confirm, which is this one. So saying 1,700. And then we'll check if we've got any other transaction that we need to adjust. See that lastly we've got the foreign errors were noted when preparing the February bank reconciliation statement. We are seeing these two errors which affected the journals, so we are not going to adjust them in the bank reconciliation. So it means we've exhausted all the errors which needs to be corrected in the bank reconciliation statement. So from there, we can now calculate the balance. So how can we calculate the balance in this case? We are supposed to just to put a description of balance as per SB bank account. That's the final balance. It should come as balance SB bank account. Very important to take note here. We don't give a description of bank as statement. It's balance SB bank account, and then we can only find that balance by trying to compare the debit and the credit. We add the total of the debits and then add the total of the credit. We see which total is greater, which is going to come in between the double lines, both sides. So if you add the total of the debit and the credit, you are going to see that the credit is going to be the greater side with a total of 12,000. With a total of 12,642. So that total is also supposed to come to the debit side, 2,642. And then if you say now 12,742 minus 1,700 minus 2,300, you're going to get the balance here. Is 8,642. So this becomes the balance that we are looking for. So if we were to calculate now the balance SB bank account using the cash receipts journal, balance and the cash payment journal balance, and of course you have to take into account the closing balance of the bank reconciliation statement of the previous period. You are supposed also to get the figure as 8,642, and then in this case also you are also supposed to be able to determine what balance do we have here is balance in the bank account. We are seeing that it's appearing on the debit side, but the BD obviously would be on the credit side. So this balance that we have here, so basically what we are saying this balance that we are having here, it's a credit balance. It's a credit balance of the bank statement. It's a credit balance of the bank statement. But if you go now to the bank account, it will be opposite. We are now saying for bank account is a what? A debit balance. Debit balance of the bank account. So basically, let's take note of how to determine the balance. We check where we are having our PD. So if you're having our CD like this on the debit side, on the bank statement, it means it's going to be a credit balance is BD now. So where we have our BD is the balance. So in this case, it will be a credit balance on the bank statement. But if you are looking from the point of view of the bank account, it will be a debit balance. It will be the opposite. So basically, that's what we have in the preparation of bank reconciliation statement according to this video. So this is exactly a typical examination question that we have looked at. So let's take note, more typical examination questions are going to be uploaded on this channel. So let's stay tuned, let's subscribe and share to all our colleagues who are doing grade 11 accounting. Let's turn on the notification button after subscribing so that we get notified of new uploads. Let's meet again in the next video. As for this video, I'm out.